Hello, and welcome to this session on duties and responsibilities of company directors in Ireland. This presentation is brought to you by the team at BNO, Chartered Accountants. We hope you will find this material useful. Let's first discuss what a company director is. A company director is someone appointed, usually by the members, owners, of a company, to manage and run the company on their behalf. Almost anyone can become a company director provided they are 18 years of age or older. You cannot be a company director if you are an undischarged bankrupt, a disqualified person, but some provisions apply here, a restricted person, but some exceptions are allowed. Let's go through some types of company director. All directors have the same legal responsibilities. The types of directors include Managing Director, Executive Directors, Non-Executive Directors, not involved in day-to-day management, De facto Director, not formally appointed, Shadow Director, not formally appointed. What are the duties of directors? These can be broken down into two main types: fiduciary duties and statutory duties. Fiduciary duties are owed to the company and the company alone. They include the necessity for a director to act in good faith, act honestly and responsibly, act in accordance with the company's constitution, not use the company's property, information, or opportunities for his or her own or anyone else's benefit, not restrict the director's power to exercise an independent judgment, avoid any conflict between the director's duties to the company and the director's other interests, exercise the care, skill, and diligence which would be reasonably expected of a person in the same position with similar knowledge and experience as a director, and have regard to the interests of its employees and of its members as a whole. Now, let's focus on the statutory duties. These include to disclose to the company certain personal information and any interests in a contract or proposed contract, to keep adequate accounting records, to prepare financial statements, to have statutory financial statements audited, to maintain certain registers and other documents, to convene meetings of the company, and to file certain documents with the Registrar of Companies. Let's specifically go through the duties relating to accounting records and financial statements now. The duty to maintain adequate accounting records mandates that records should be kept at the company's registered office or at such other place as the directors see fit. Failure to keep adequate records is a Category 1 or 2 offence. What exactly does adequate records mean? They are records that correctly record and explain the transactions of the company, enable the assets, liabilities, financial position, and profit or loss of the company to be determined with reasonable accuracy at any time, give a true and fair view of the affairs of the company and explain transactions, ensure that accounts comply with Companies Act, and enable those accounts to be properly audited. Annual financial statements must be prepared from the information contained in the accounting records. Must give a true and fair view of the assets, liabilities, and financial position of the company at year-end. Directors cannot approve financial statements unless satisfied they give a true and fair view. Accounting records typically include the following, some of which are required by law, and others of which are required by accounting standards. Profit and loss account. Balance sheet. Cash flow statement. Accounting policies and methodologies adopted by company. Notes to the financial statements, and Directors' report. Company directors have a duty to have statutory financial statements audited. Unless a company is audit exempt, it must have an annual audit. The qualifying conditions for audit exemption are set out in the Companies Act. Company directors have a duty to maintain certain registers and other documents. These include the following: Register of members, Register of beneficial ownership, Register of directors and secretaries, Register of directors and secretaries' interests, Register of debenture holders, Minute books, Directors' service contracts, Contracts to purchase own shares. The directors also have a duty to file certain documents with the Registrar of Companies, CRO. These include Annual return, Change in, Annual return date, Registered office, Directors or Secretary, Alterations to share capital, Creation or satisfaction of a charge over company property, Notice that a director has become disqualified abroad, or Notice of company resolutions. Company directors also have a duty to convene general meetings of the company, including the AGM. There can be 15 months max between AGMs, but single-member companies may dispense with the AGM. Directors are required to place companies' audited financial statements before the members at each AGM. The director's report must be annexed to financial statements. Thank you for reviewing our summary session today on directors' duties and responsibilities. We hope you enjoyed the content. Please like and subscribe to our channel for more content like this.